SoFi and PayPal stock just had their earnings, and we're going to talk about exactly what you need to know. Now, we made a video yesterday going into SoFi, or the day before after its earnings, everything that happened, and why it was looking so good. Both of these names from earnings were looking amazing. They were bouncing. They pushed, local highs. SoFi all-time highs, PayPal local highs. Again, great reaction. But as of right now, as you can see, they're on the decline. SoFi, as earnings were here, pushed up to almost $33, dipping back down. PayPal stock, way more of a downside, right? You gapped up, you pushed into almost $80, dipping back down below 68. This is a major question mark right now. But I do believe you're getting some monster opportunities right now, and that's what this channel is all about: finding diamonds in the rough, finding those big next trades, and hopefully taking advantage of other people's fear so we can make money in this market. Okay, so we're going to be diving into this pretty deep, again, and everything that we're going to be looking at here. Now, I'll cover SoFi first, and then I'll move into PayPal. SoFi should be a lot more quick. So again, if you have questions, comment down below. Let me know your thoughts. I always recommend following on Twitter as well to get all the updates, because I'm posting there 24/7 all day throughout the day. Again, it's there for you. Now, before we go too far into the video, before we do too much deep diving, etc., I want to say right now, if you want to see what we're trading, how we're trading every single day, the Discord link is down below. Again, you get a breakdown of what we're doing with futures every single morning before we do anything, because again, you have to understand how futures are moving. You want to know how equities are going to move, and then you go into the watch list of what we're doing there. Jordan Zone, his swing trade, his leaps, what he's doing there, his NVIDIA leaps, he just started closing them. Monster trade there. Watch list, our watch list every single morning. Trade ideas, more swing trades. Technicals, our scalps. These are our day trades. These are what we're going to be seeing the most of, most likely. And then obviously our trading chat, where we're every single day there. And then you can also go into a deep dive of more education, voice chat, etc. All the profits as well. Link is down below. Do what you gotta do. Now, going into SoFi, let's talk a little bit about this, okay? And there's a few ways we need to track this. So SoFi, obviously, you had your earnings on Tuesday. Tuesday, you move up. Wednesday, you move up again. You hit all-time highs here by 32.6, almost $33, trying to push up. And so far since then, you're dipping back down. Now, is SoFi dipping down because of earnings? Like, were earnings bad? No, they were really solid. It showed significant growth. It showed revenue upticking. It showed that more members to the website, and it's all steady, right? It's not like a giant surge. There's no volatility. It's a nice, boring, great stock to own. That's what we like to see, right? And SoFi right now is dipping back down. Now, again, I want to go through buying opportunities, where and why I'm looking at these, and ultimately what's pulling it back. Now, the only thing that's happened since here was FOMC. Now, I made it very clear that interest rates are very big when it comes to SoFi in the direction of how it's going to move over the course of time. Again, and as we're looking, you can go to the 10-year yield. It's the best way to track mortgage rates and things along those lines. I think mortgage rates is probably the number one thing you should track for interest rates if you're interested. In the 10-year yield, US 10Y, if you're on TradingView, you can actually search it up, US 10Y. That's your 10-year government bond yield. And this is a good way to track it. So as this comes down, you can, relatively speaking, if you put the mortgage, 30-year fixed mortgage on top of this, it would give you a pretty good metric of understanding how we're moving. Okay, and as of right now, you're bouncing back from obviously that meeting. You're hitting back into the 50 EMA, and that's where we're at right now. Now, the reason why you're seeing more of a bounce on yields and mortgage rates, seeing a little bit of a spike in the short term, is because Fed Powell came out and basically said, look, we're driving basically in the fog. We're driving a little bit blind. And what he meant by that is you're not getting government data, and you're not going to get any more CPI, PPI, PCE data, et cetera, on inflation. So we're not going to be able to track too much of that. Although, when we go back to CPI, it was basically, this is his words, not mine. He said you were around 0.4 away from hitting your inflation target before tariffs started taking place. Very important to understand. And he has already said he believes tariffs are a one-time price raise when it comes to the consumer, how it's going to affect them. Again, his words, not mine, so don't attack me. And again, he says it's all transitory, which he also did say in 2022, worth mentioning, so could be full of it, but it's very important to know. Now, again, the speculation again is that they might not cut going into December. And Powell's words is it's just not guaranteed. He didn't say it's not going to happen. He just says it's not guaranteed with some of the voters right now. Okay, which is the logical thing to say. He doesn't want to ever guarantee anything. Now, the other thing to think about this is, let's say hypothetically, okay, let's say we get into SoFi and interest rates start spiking up again. Okay, they just do. Tariffs hurt us, all this stuff happens, and SoFi dips back down to 25. Let's say SoFi dips down to $20. Okay, let's say that happens. In my opinion, SoFi will still continue to be a buy, because what's happening with interest rates, you're going to see rates get cut. You're just going to. When Powell gets out of office, when he will eventually get replaced. It's going to happen sooner than later. You need to understand that Trump is going to cherry pick someone to put in that spot who will listen to him and will do exactly what he wants them to do, which is cut rates a lot. And you're seeing Secretary Bessent get mentioned more and more and more. And I'm here to tell you, if that happens, interest rates are going to get cut and they are going to nuke. They are going to nuke them, and it is going to be aggressive. I'm telling you right now. Again, that is way down the line. You're more interested, well, Tyler, short term right now. I've said since the beginning, right now, I have not entered any options on SOFI. In my opinion, if you're buying, it's just a stock buy as we speak. I want to start buying options where I see like I'm getting great risk to reward, great value right there. And so the buying opportunity, let's go really quick into this, okay? On the weekly, zoom out. So your buying levels, number one, 28.4, 28.5. That's your previous all-time high from your IPO, SPAC, whatever you want to call it. Okay, your next level is around 24.5 there. And if you lose that, I do think you'll get some substantial downside into like $21, $20. And that would be the ultimate buying opportunity. That being said, you also have a monster support here of the 50-day moving average, which you've been grinding above, basically going all the way back until April of this year, which you got below here, the 200 SMA remounted, and you basically never looked back and you went straight up and you've been grinding above it specifically very recently. Okay. So SOFI, those are your levels. Would I be watching? Take a screenshot, do what you got to do. I also post this on Twitter, so I recommend following on there. Again, you can have all the charts for you as well up there. Okay. So SOFI, that's my mindset. Again, you're getting a dip. And if anyone's like, someone commented like SOFI is so red today. And it was funny. Someone commented like it was actually crazy, like commented on this video on the channel after SOFI's earning, because you gapped up to like SOFI's red, what is happening? And you dipped, and it was funny, you bounced right back in all-time highs. And I was like what are you talking? Like if you're going to this place, guys, let me tell you, if you're going to this place to where you're hitting all-time highs and then you're dipping down $2 and you're freaking out, you're either number one gambling, which if you know there's a gambler's anonymous and hotline and all that for you, just Google it. You can call the number. And number two, you're not investing. Like you're not. SOFI is not going to make you rich next month or the week after or the week out. It's not going to. Okay, I'm here to tell you the truth, right? I'm not here to get people rich quick. I'm here to just share my thoughts on what I'm looking at, what I'm investing in, why I like the opportunity, and hopefully break it down in a fundamental way, right? While addressing all the risk, okay? Very important. Another video I made today was BMNR. And I just want to clarify, because people are getting like, they're raging. They're like they're going crazy. Guys, I've said plenty of times where I'm looking to buy options if you break out of this like $60 range, because you have no liquidity. This is going to go nuts, right? When you're looking at cheap, affordable stocks, you need to understand you don't have to full port because you're buying an affordable name that you think is a value proposition, right? For instance, if I'm buying NVIDIA, I'm probably buying options 9 out of 10 times, unless it's a monster dip that I'm buying shares and then buying more options as well, because NVIDIA is a mega cap. It's the largest name in the market, right? It's very volatile. It's very liquid. I can trade options on it. I'm going to get good, I can buy the, wherever I want, because I'm going to get good price action back and forth. But when something's weak, I want to wait till I get into my buy levels and I'm going to buy stock, right? I'm not going to start buying options until I start seeing the trend flip, the trend change, confirmation, consecutively, right? And us being in a pretty stable condition, not when Trump is tweeting at 4 o'clock in the morning about China and tariffs and whatever else he wants to, goddamn soybeans. I don't want to do nothing with that, right? Like be logical, people. Again, if you want to get rich quick, cool. Like, go to someone else's channel, block Tyler, whatever. Come back later when you lose all your money and you're like, okay, well, maybe Tyler was telling me the truth. He wasn't trying just to get a click, right? Next one up, PayPal. So PayPal is getting definitely a lot more hit, right? And I do think PayPal, and I've said it, I think PayPal is way riskier than SOFI, 100%. However, if you go to the weekly here on PayPal, there's a lot more opportunity. I'm not saying you're going to go back to 300 or 280. I'm not saying that. I'm not even saying you're going back to 200. But I do think there's a world in which you get back into 120, 118. And that's where the opportunity, even at $80, $90, that's a lot of money you can make. Okay. So looking at PayPal, and I actually do think PayPal is a lot closer to buying options than SOFI options right now. Okay. So PayPal is coming back down into this range. 68.6 was your big level here. Okay. Now I'm going to go into fundamentals here for a second, which might be boring for some of you, but someone's got to do it, right? And I actually I want to do some of the fundamentals in a way that you guys can also do it as well. And so again, really quick, guys, a lot of this stuff you can do on ChatGPT. I'm trying to prove a point. And again, it also highlights the issue. So you don't have to say, oh, well, Tyler's just making up these things. So you can see and has links for you as well. Okay. And that's the really cool thing with ChatGPT is that typically it shows you links. So you can go back and look at all this information, why it's important, and it'll break down its thoughts as well. Okay. And so what I did is I just said, hey, break down PayPal's earnings for me. Simple, right? Show me the good, show me the bad. And basically you had a good beat, and this is why you went up, obviously. So you beat, that's why it was good, it was solid, and now you're tracking back down. And this is the problem with mid caps and smaller cap names, right? PayPal is not a large cap, but it's not a small cap either. It's like right in the middle, okay? And so PayPal, this is the problem, is when you start going full send aggressive on these names and you start seeing a pullback on the market, these names are more susceptible for pullbacks. That's why I'm saying you don't have to full send YOLO full risk. You'll never hear me say, guys, this name's cheap. We need to put every dollar on this one, right? That's what I'm doing, boys. You're never going to hear me say that, okay? So when I look at PayPal, again, and I see it's come down here, obviously it's a little concerning. But now I'm at the point of like, okay, could become a buying opportunity quick. Now, ideally for buys, I want to see us above this 200 SMA. That's my main thing. The 200 daily moving average is at 71.3 now. It's going to keep coming down. We'll track it as we're moving, but that's my buy retest continuation into 77 and then ultimately pushing past 80 is what we want to see. So what we're looking at there. Now the earnings are interesting. And I talked about PayPal trying to switch up their kind of model of their business, right? And it's a long time coming, but this is what you want to see. Now, what I want to do is go back down to what was good and the areas of concern. And we're going to go into their partnership that they just announced. Okay. Number 2 is right here. So number 1, you see relatively modest payment volume growth and flat transactions. Again, you have to also understand for people like who uses PayPal. Well, number 1, people use it. It's more, I think it's less in America now. People use PayPal, but everyone in America is using Venmo. Worth mentioning. Venmo, Zelle, those are the big ones right now. Cash App. I don't think as many people are using Cash App as they were before, but still, and Apple Pay is another big one up there too right now. Okay. But so you saw payment volume is growing, but it's growing slow. And then you also saw payment transactions decreased. So the total number of transactions decreased, which less people using the platform. Important to understand. So what they're doing is they're switching their business mix and trying to switch up the model a little bit. So as PayPal shifts towards higher margin services like credit cards, checkout, BNPL, value-added services, it may face new risks, regulatory, credit loss, competition. Biggest one can be credit loss and regulatory. The other competition, who cares, right? They're getting into new markets, so they should bring in more revenue, more growth no matter what, especially in the beginning phase, right? Consumer spending slowing, we already went over that too, okay? That's the biggest thing. Now, what they're doing is they're partnering with OpenAI. And so what they're trying to do, and again, I don't love the, I really don't, okay? I'm going to tell you right now, I don't love every company saying we're going to partner with OpenAI and the stock surges. That's a little scary. Okay, that is a little scary. However, what they're doing in the path could be pretty beneficial. So OpenAI and Google are joining forces with PayPal. And basically what they're trying to do is both systems communicate using the open agent to agent protocol, the new agent payments protocol as well. And so what they're going to do is integrate into there, providing security, fraud protection, transparency. So doing some of the back end stuff that OpenAI doesn't have to focus on that, right? Focusing on obviously what PayPal is good at, connecting and plugging right into the platform of OpenAI, what they're going to be doing with their new apps, new search engine, etc. Really smart, right? So if you guys have seen the new Atlas that's developed, so they want to work right in there. So anytime it's a payment transaction that you can use PayPal, and they're going to try to make it a lot more seamless as well. I will say in the past, PayPal has been a little bit difficult. It has been difficult when it comes to payment processing on different things. Few prop firms, for example, use it, but it's a little bit slower, takes a little bit more time, redirects you. So they're trying to make that all a seamless integration, kind of like how it is with Venmo. Venmo is very quick. So I think that's the direction that they're trying to go, and that's what you want to see. And again, they're partnering with the biggest companies out there. Now, where could things become a problem? If we start to see competition also partner with Google and OpenAI, that would not be ideal, okay? So that would be the problem for me. We'll see how it goes. But yeah, and again, as you can see, Google Cloud's announced a partnership with PayPal to help retailers add AI-powered shopping experiences, which you're also seeing Amazon integrate some of this AI as well. And so again, you're seeing it all just kind of integrate together. And this is the where PayPal should have been. Like, to be honest, they're slow to the game, and they're working with Google, who in my opinion is also slow to the game, but good to see. Like, they're transitioning to what they need to be doing. Now, again, you're not going to start seeing reap the rewards of these transitions soon. You're not going to. However, you've seen, these companies release early, growth, early expectations, early things happening. So again, PayPal is one of those names we have to be watching right now. And again, above your 200 daily moving average, I like it. And this is another thing that I look for often with stocks, okay? And a lot of you guys, I see a lot of people spend a lot of time on small time frame charts. And there's nothing wrong with small time frame charts, okay? But the problem with small time frame is you don't see big picture. And so, this is where I think, this is how you make money here, right? So this range, 68.6 down to like $56, you sat here basically from 2023 and to almost, over half of the way through 2024. You break out of this, you go ballistic, and then you break back into it, and now we're struggling here, okay? So again, the levels are all here for us, and I think they're providing the path of what to be watching for. I'm gonna be watching over the next few days how we react to this zone. I think PayPal's earnings, if anything, were very promising, okay? Again, I think SoFi is a far better company, like as a whole. Like I feel way better putting my money in there and just forgetting about it. Even if SoFi dips down to $20, I just want to buy more, right? PayPal, you could dip down to $50, $55, and I'm like, okay, well, let's wait a little bit, right? Let's wait. Let's not get crazy. It's also important to remember, PayPal is still bringing in great earnings. Back in May, they reported 7.8, then 8.3. And then 8.4. Like there, some good growth. Growth is happening. Nothing crazy, but still bringing in lots of money, lots of traffic. They're still a big name. Whether you like them, hate them, it doesn't matter. They're still bringing lots of money. That's my visual. That's my viewpoint. If you have any questions, comment down below. Appreciate you. See you next time.